What is the impact of inflation on mortgage rates in 2023? And what is the forecast? Hi there, Ella Gurfinkel here, Senior Loan Officer with Team Ella at Fairway Mortgage, and welcome to my Ask Ella show. This is a safe place where you can ask your questions about mortgage and real estate, and where you don't have to be embarrassed about your question or feel dumb because you just don't know what you don't know. And that's why I'm here to answer your questions. Yes, there are certain expectations that we have of mortgage rates and mortgage rate markets that will take place the rest of the year, as a matter of fact, because of the inflation. What you have to understand is that inflation is the arch enemy of mortgage bonds. If you ask me why, the answer is very simple. Mortgage bonds have a finite return on them. And mortgage bonds are, by the way, what drives and what interest rates are derived off of. So if a mortgage bond security is paying out 5.5% today, you're guaranteed 5.5% for the life of that security. That's a 30-year bond. If the inflation is higher than 5.5%, subtract what your yield is from the rate of inflation, and that's how much you will be in the hole. Yes, you are getting payments, but those payments are below the rate of inflation. Therefore, the value of your money is diminished. So that being the case, when the inflation runs high, typically so do mortgage interest rates, because mortgage bonds are simply not that attractive as a commodity or as an investment vehicle. When the inflation does start to taper, and frankly, it already has started to show signs of abating or tapering, the mortgage bonds become more popular as an investment tool, as an investment vehicle, because of their inherent safety. It's a 30-year guaranteed return every freaking year. Inflation goes down. That's right. You got it. Mortgage interest rates go down too. So the expectation is that we will see better, as in lower, interest rates later this year. Actually, Fannie Mae economists are as bold as predicting 4.5% rates into 2024. I guess we'll live to see it. Time will tell. But in the meantime, it is not my prediction. It's the Fannie Mae's economists. So on a serious note, inflation goes down, rates get better. Inflation was high. That's why we saw pretty high interest rates. But guess what? Look at the big picture. Over the last 30 years, the average rate, mortgage rate, was actually a hell lot higher than what we're seeing today. So take everything in stride, and there's a perspective on that. If you do have mortgage questions, ask away, comment below, DM, subscribe, and I will see you on the next one. And this, my friends, is your safe zone where you can ask any mortgage-related question and not be afraid to be shunned.